earnings reports, the Super Bowl for every quarter. So this is probably the most exciting time every 3 months or every quarter is the earnings season or earnings report season. Basically, earnings season is where every stock, publicly traded company, for the most part, reports their quarterly earnings, and this moves the stock very, very greatly, up or down. So we get to get an idea of how well they're doing financially and trade the stock based on momentum. When you have earnings reports, it's tons of opportunity to play the volatility. Volatility is how much it moves either up or down sharply or not. The more sharp it is, the more volatile it is. The less sharp, less movement, less volatile. So you can see here, TD Ameritrade, again, one of our favorite broker. And you can just go to markets and calendar. And we're going to start with October 12th. There's nothing going on in September for the most part. So again, we're going to skip to October. Looking at October here, you can see JP Morgan Chase, Wells Fargo, Citigroup, the three big banks that are reporting that Friday the 12th. So we're going to go ahead and take a look at that and the stock and how to play it. Very simple enough, right? So let's go ahead and start with JP Morgan Chase. We're going to bring up our browser here, or webcam. Our setup. And we're going to type in JPM. So again, as you know, we always do the 1 hour charts as always when it comes to trading. Well, we're going to go ahead and set up here on the daily because it's more of a long-term trend. What I want to see is how they've been doing every quarter and how has the market been responding. So you could see here back in last year, to be exact, October 12th, 2017, they actually beat their quarterly earning by 6 cents. And the stock, for the most part, dipped slightly right after earnings and then soared right after that about, $4 a share. About a good 5% move, only a couple of days, about 2 weeks after. And then it dipped and then it came back up again in a little bit of a breakout. So again, we're looking for short-term moves, sharp moves actually, either up or down, doesn't matter. So we're looking here on, this is January 12th, estimated 172, their actual was $1.07. But yet the stock went up, even though it missed. So it's not as simple as if they meet or miss their earnings. It's all about reactive. We don't like to predict, we like to react. Always keep that in mind, guys. You're not here to predict, you're here to react. And you can see here as well on March 12th, they beat their earnings estimate, and the stock fell. It fell pretty sharply, about $6. And then it just pretty much based down and came back down to about $1.06. So $10 fall and then went back up. So again, it doesn't matter here. We're looking at earnings. So you can see here as well, a beat here of 229 against 227. This is earnings per share. And the stock actually went up from $1.06 to $1.11. So another $4. Again, so we've seen an implication move for about 4%, 3 to 4% move. So again, that's still a nice little move for the day. So what we could do when it comes to JPM, now you're not going to get as much volume ahead of time, but again, we're going to look at it. So if we want to play that one, you're not going to pretend we don't see the volume here and pretend the prices are not here. If you wanted to play it, you would play for that day and you would buy some calls if it breaks ahead of time, if it broke your resistance. If it broke your support, you would buy puts. But again, we're looking for moves that actually are sharp enough for us to make some money on. Again, sharper the move, the more volatile the move, the more money we can make on the option side. So again, up or down, it doesn't matter. Bull market or bear market, it doesn't matter. We can make money. So again, moving on. We could take a look at the next one, Wells Fargo, WFC. Let's take a look at it. Look at the chart here, WFC. And you can see long-term here. Big gap down from 55.65 to around 53, $3 miss, $3 a share. $3 for the share here. And the actual was a big miss on their earnings call. And you could see $1.04 for estimate, 84 cents. And then it just took off from 54 to 67 right then. So we have here the next earnings report. This is back on January 12th of this year, $1.16 against $1.05. They actually beat, again, fell slightly and then soared up about $2 a share. Again, $2 against 64 cents is a very big number. So again, good amount of a raise there. This is the big one here, but this was just news. This wasn't even an earnings report. But you can see here, now we're guys around $50 a share here, and we had an earnings report, 112 against 107 with a beat, and it just based down, no big movement, just stayed the same. And then here we had a 98-cent actual against a 114 estimate. They missed, and the stock jumped. So again, guys, it's not as simple as that. as just, oh, the day beat is going to go up. If they miss, it's going to go down. Not that simple. You have to, that's why it's not about predicting. It's all about setting up your trades. So we're going to go ahead and take a look at the last earnings report for Wells Fargo on 7/13. I'm going to go ahead and take a look here. This is a daily chart. I'm going to go ahead and bring up an hourly here. Oh, this daily chart is probably your best bet. So again, this is this report here, 7/13. But again, I want to go ahead and bring up a little more. I want to zoom in if I can. No, I can't. See if I can bring this up here. No, we're gonna have to go to daily. But you can see the big move here on the actual earnings report. The candle here. This is a daily candle, by the way. So we had a move from 55.79 all the way to 54 from that day, and then we gapped up. So again, you could have easily put a nice big resistance line on 55.25 on that breakout, and you would have rode it for a nice $1.75 move to the upside and got out for your 40%. It's kind of difficult here on the daily chart, but again, when you see an hourly chart, it's completely different. So you know what? Let's go ahead and find something that's a little closer to our dates. So again, today is September 8th. Let's go ahead and see what's coming up this week. The 14th, nothing. The 13th, okay, Adobe System, ABBE. This will be a lot easier for you to see because now we can start looking at the charts. So let's go ahead and put up Adobe. And we're gonna go here in the daily chart. Again, a very parabolic chart, just straight to the upside. And you can see here for $1.10 on this last earnings report from a $1.03 estimate. And then the stock still fell. But again, bounced up. Here, another one, earnings report. $1.26 on a beat against 118, stock fell slightly. Here, another one, $1.55 actual against the 147 estimate, stock fell. So you're starting to see 3 earnings reports in a row, the stock is falling, 4 in a row. So again, knowing what we know, the last 4 quarters, they have beat their estimates, but yet the stock falls. But then again, every dip, someone is buying, and they just keep going up from lowest 150 to 260, $110 move to the upside. Great. So let's take a look at an hourly chart and see how Adobe's looking. Again, just like we talked about in our chapter 3, all about text. We be from left to right. We go from the low. We're gonna go and set up to the low to the current price, and you can see that would be a bullish sign. So where we're gonna put our resistance, right around 264. I'm gonna create an alert here, 264 just to be exact. Create, and then I'm gonna go ahead and set up the support right over here at 256. Kind of a wide mark there for the channel. But again, you can see that we're creeping up to the upside. So if we break 264, guess what? We're gonna buy some calls. And then we're gonna target 269, which is the new all-time high. And if we break down 256, our next support level will probably be around 247. A nice big drop. So again, based on what we saw the last earnings report, the stock may fall, but we don't know yet. We're still right in the middle. So again, the poker analogy here is that, let's just say these are 2 jacks. Can we play 2 jacks in Texas Hold'em? Sure. Are we likely to win? Probably. But again, we want to react. We don't want to predict. So let's go ahead and take a look at the options chain on Adobe. We're going to type in Adobe here, and then we're going to type in 14th, and you can see right off the rip, I see 1,200 volume here on $4.65. Again, pretty pricey for the most part. Because if we click it and we buy 1 contract, guess how much that's going to cost you? $466, basically. Again, everyone is different. Is it for us? Can we do it? Absolutely. In our portfolio, no sweat. Everyone's portfolio is a little different. So again, we want to make sure that you have your 2 to 4% set up. So again, what we could do, just to keep a try on it, we're going to go ahead and create an alert. If it breaks above $5, we're going to see and get an alert on that ask price. 1,200 volume is still pretty solid. Again, it's trending to the upside because you're saying a lot more call side, a lot more buyers, and then a lot more put buyers. So again, it could be a little bit of a bullish bet on Adobe. Let's see if we have anything big as well this week on the 11th. Nothing else for the most part. Day Bunch doesn't have much. Let's see the 17th, Oracle. Oracle on the 17th, which would be next Monday, not the Monday coming up, the next one. Let's take a look at Oracle together. Cloud-based company, ORCL. So we're going to go ahead and take a look here, ORCL, and we're going to take a look at them long-term, like we talked about. Take a look at the daily chart for the last earnings. And you could see last earnings, big drops, big drops. It doesn't even matter how they did. Big drop, again, big drops every single quarter. So again, it doesn't even matter if they're beating their earnings reports. I can see right here that it just keeps creeping to the downside. So here's the deal here. The high is first, right? we're going to go to our current price. We're bearish here on this chart on the daily. Remember, left to right, whatever comes first, high or low, what we're going to do, high all the way down, 47.81. We're going to go to the hourly chart now. Let's take a look. Again, we're right near support actually. So again, looking at what we look at, playing the cards we were dealt, what are we going to do here, guys? We're going to go ahead and create an alert to the downside at or below 47.55. And if we break above this mark here, again, you want to see some consistency on the resistance line. So right here would be perfect. We'll do a 48.29. You can see that channel's been pretty much set there. But again, very bearish here. Getting closer to support, 47.55 would probably be the bet. Go to trades, ORCL, and this is on your options chain. And we're going to go for next week, the 21st. Not a lot of puts, but tons of options action. So again, a lot of people are selling puts. They're selling them to be bought. A lot of calls, some call options here on 81 cents for the 49s, 2,500. Pretty interesting. On the 14th, again, not much to do. We beat some 50 calls, but again, we're waiting for the earnings report. So to confirm the earnings report is on the 17th of September. So you want to get those 21 September calls or puts. So let's take a look at the 21st. We have some action on volume. We're just looking at volume, 25.31 on the 49s. But again, it's irrelevant now. We're not going to do anything until we break our alerts. If the alerts do not break, you do not make a move. You're not predicting, guys. Remember that. Remember that. Do one more here on FedEx. FDX again reports on the 17th. FDX, Federal Express, and we're going to read it from left to right. Low first. Okay, left to right. We're on an hourly chart. We already had that set up. Let's go to the daily and take a look at their last earnings reports. You can see here, earnings report, stock went up. Earnings report, stock went up. Earnings report, stock went down. Earnings report, stock went down. So 2 for 2, 2 to 2. Pretty difficult to kind of set up. We're up to 274 on the high. We're going to go ahead and bring it down here. Bearish on the daily, but yet bullish on the hourly. Take a look at the hourly. So we're going to go ahead and set up a resistance chart. Resistance mark right over here, at or below 244.08, and then we're going to put our resistance right around here at 248.29, 248.30. That's fine. So there you can see that we've been basically breaking out, but yet breaking down and then bouncing back, but it still reverts that same channel. Still saying the same thing here. What are we going to do? We're just going to keep watching. Again, if our alerts hit, that's when we make a move. Let's just take a look at the options chain for FedEx currently, 21st. Not a lot of action. We're seeing some open interest, but not a lot of action, to be honest with you. Again, 1,500 is my rule of thumb when it comes to volume. If it doesn't have 1,500, forget it. You want to have a good option where you can actually sell the actual contract. If you don't have the option, you don't have the volume, it's going to be very difficult for you to sell your option, to monetize your option. Again, we don't want to exercise the option. We're just speculating and getting rid of it and selling it as quick as we can for the profit of 40% and get out of there. That's it. So there you go, guys. You know, when it comes to earnings reports, tons of opportunity out there. It's just giving you an opportunity to look at certain stocks that maybe you wouldn't have looked at before. But again, big caps, the big cap companies, don't waste your time, guys, with these companies here on the small side. I'll even show you which one they are. You know, Copart, Manchester United. I know it's a soccer team, but don't worry about those. And then, you know, 10th, I mean, Sonos, Taylor Brands, none of those are going to make any, no one writes options on those. So it's not really worth it. Pivotal Software, no. Again, big companies. You want to take a look at the big ones. Adobe would be a good one. Kroger, maybe. We could take a look at Kroger together, which is a grocer. Let's take a look at Kroger just for one more for the road. I can just take a look at the options change first. We got some 20, we have for next week, no volume other than the put side, but not even 1,500. Want to take a look at we'll put some alerts too, guys. And again, guys, I recommend that you do alerts, you know, for top 3 per week of the earnings reports. Pick 5 of them, just do them daily. Again, takes 10 minutes a day for you to do your alerts, 10 minutes, and then you'll be set because you'll get them all directly to your phone or to your desktop or to your cell phone notifications. So again, it keeps you focused on what you need to do. Let's take a look at Kroger daily. Earnings reports, not much of a move. Big move to the upside here. Big move to the downside here. Big move to the upside here. So again, volatile, breaking out on the daily, but on the hourly, pretty much it's bullish. But again, we got to see exactly where we're going to go. We have to go with the high here, create an alert if we break out about 32.76. So we do have some volume there. If we break down below 32, I'm going to go ahead and create an alert there. 32.05, I'm creating an alert. and we're pretty much stuck in that range here. But again, very volatile on the daily side. But again, I want to see the options volume. You could see big implied volatility from 28 to 24, from 25 to 29. So like almost $4 a share per move. So big time. That's where your opportunity is to cash in on those kind of moves, either again the put side and the call side. But again, do not predict. Do not predict. Do not predict. You're just here to react. That's all you're doing, guys. So again, make sure you use earnings reports every quarter to your favor and you ride those waves every time, because those big moves are just opportunities. You should be able to see your trading chart or your actual platform as an ATM machine, because it's exactly what it will be if you do it correctly. I'll catch you guys for chapter 12, tracking your trades. And we're about to wrap it up here. We'll catch you guys next time.